Back for Alphacharts with a midweek video. Today is December 31st, 2024. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. First off, Happy New Year. I wish you all a best 2025. And this is also the last video and last part of the free view that we've been doing for the subscriber service. Um, First off, thank you for joining us during this free view week. I appreciate that. Um, Welcome to all the new subscribers that have come on board. And if you haven't done so, consider giving it a try. Again, you get everything you've seen here, which you've seen the last week, the way I give the information, the way I talk to my subscribers and share how I'm looking at the markets for $10 a month. And again, it's month to month. There is no contracts. You just click subscribe right there in X, and it's very easy to do. If you're a YouTube subscriber, you would do join right there. But again, I appreciate you guys showing up. And again, it would be an honor to be a part of your trading journey if you would join us with the group. All right, let's get going. Again, last video for the free view. After this, all videos for subscribers will be in the subscriber only tab. All right, so we have the SPY. And what's interesting is that the last few days, I would have expected a much lower volume, but we've had a pretty heavy volume coming into the end of the year. And, and you could see a topping formation, whether you want to call this a head and shoulders top. I think we can make that designation. If this breaks the neckline, we have confirmation. Again, the neckline should be right around 583, 584, maybe 580. It's going to be in this general area, right? Buyers did show up down here around 580-ish or so we have to take that into account as well. But again, looking bigger picture, that is a toppy look. We'll continue to watch and see and take it day by day, but not something I want to get in front of. We have the daily action underneath the 50-day moving average, and now we have a flattening 50-day. We have declining shorter term moving averages. So there's a lot of, at the best case scenario, questions. Also, this broadening pattern. Can't forget that. It kind of gets lost sometimes. But we have a broadening pattern, which means that maybe increased volatility coming up. So this is one of the reasons why we've been cautious this market and not getting too caught up in this counter trend rally. Right, there was a little bit of money to be made here, but these are pennies in front of the steamroller right there. That's what this is. The bigger trend, the larger trend is still, I think, making lower highs and lower lows. We'll find out if there's another lower low in store here. But again, it's not looking good. Looking at the RSP, RSP was like, oh, that's interesting, right? So go back. This had many. There you go. So SPY was down 0.35. RSP was basically up 0.19. So that's actually kind of nice to see, right? But with all that being said, we're still RSP wise underneath this declining 50-day moving average, and there's really not much goodness going on here. Again, has that toppy look to it. I put these in here for reference. They don't really mean much, to be honest with you, because we don't know if that's going to play out. But right now, underneath the declining 50-day moving average, that matters. That's a big deal, right? So again, this is another reason. Equal weights, very cautious underneath declining moving averages. That's a big top, right? That's a pretty good sized top. Again, is this like a market crash coming? I don't think so. I think the market's good 2, 3, 4 times a year max, probably closer to 3 to 4 times. And I think that this is just not one of those times where the market's really good to trade. And if we can sidestep and avoid those bad times and hopefully maximize during the good times, our chances of making money increase significantly. And that's what we try to do here. And right now, this is not a great time, I think, to make money in the markets. Qs sitting right on the 50-day. But again, looks very, very similar. Again, holding up just a little bit better, but still making high, lower high, and we have a low, not quite a lower low yet, but it's still not looking great. Equal weighted Qs were down 0.32. Let's see what the regulars were. Up down 0.82. So again, mega caps getting hit way more than than everybody else. Again, yeah, Tesla got hit pretty good today, and I'm just looking right there. Nvidia got hit pretty good today. So yeah, a bunch again, and you have this flat to declining 50-day moving average on the equal weighted Qs. Not a great look. Not a great look. And then even worse, even worse, is this potential coming back in out of this area, right? Like that's a big deal in my opinion. $90 and we closed at 89.75. So we're below that $90-esque range. And we'll say $89, right? Because that's where the 200-day is. We'll say $89. Below $89, and I think things are much worse, right? Like things can get much worse. And I think below $89 things get there. Mid caps, again, declining 50-day moving average, price well below it, still kind of above the 200-day, but again, not a good look on these charts, right? That's not what we want to see. IWM, same thing, not a good look, right? And it's okay to say that, not a good look, because there's times to trade and times to, go fishing, spend time with family, rebuild your watch list, things of that nature. And that's one of those times. Go fishing, right? Here's financials underneath the 50-day. And what we're going to do, actually, this reminds me. We're going to do this market overview. We're going to go look at the internals. Then we're going to look at all the sectors. I want to look at all the sectors and see what's holding up well, if anything. And then we'll go over our watch list. I slimmed it down even more and we'll do a quick conclusion. All right. So again, looking at financials underneath the 50-day, you have semiconductors underneath the 50, tapping at the 200. Now the 50 is already declining, right? And so now we're narrowing this, and so this is going to be explosive. Like this is going to be a big move. I don't know if I'd want to be long semiconductors here, just with the weight of the market against it. Maybe I'm wrong. And listen, if I'm wrong, we switch real quick, right? That's okay to be wrong. It's just not okay to stay wrong. XSD, again, equal weight semiconductors, they were doing better, but now they're back to basically where the 50-day is, and that's obviously not great. There's some weakness in there. Transports, they were one of the first things that really made us nervous, and they continue to hang out right at the 50-day. I'm sorry, right at the 200-day, which is flat with a declining 50-day. So transports aren't looking good. Equate transports holding up a little bit better, but still under the 50-day. Housing looks absolutely terrible. That was another one that we said, here's some warning signs coming into the market, and we were right to heed them. And then XHB also looks exactly the same, not looking good. So again, there's not a lot to like right now, ending the year. Looking as we start 2025, maybe when the market's it's reopens, maybe things get better. Maybe in a week things get better. And again, we will play it by ear. Let's look at the internals and see if anything has changed there. Let's go to the main screen. Here we go. So again, still in this cautious, and it's funny. I got four in a row, so we're back above the 23-day, and really we should probably be back to a more reddish look. We never really got out of this reddish zone because we never took out this high, and we always talked about this high from when it first created as being most important right now in the market. And as long as we're below that high, that we don't want to be long this market. Again, below the 50-day. If we're not ready yet, we should be. I'll just put it in there now because that's what needs to be done, right? Again, we've been in this kind of cautious here. We kind of went a little bearish, maybe a little bit more in the cautious. Again, what does cautious mean, bearish mean? In case you're not a subscriber, it just means that we're gonna cautious is raise cash, trade smaller, have a higher level of cash, and again start cutting laggards and be a little bit more cautious in the market, right? We want to trade smaller. Red just means high levels of cash, not trading at all, potentially shorting opportunities if they're available. I'm not much of a shorter personally. I will try a couple indexes, but beyond that, I don't do much on the shorting side because market is usually in a bullish tone. Very rarely are they actually, comparatively, it prefers to be in a bullish mechanism versus a bearish one. It's built that way, so that's what we should be looking for. Um, but looking down here, I mean, the power trend still is intact for now, but we see the stage two uptrend is weakening, right? And so we have to be cautious of that. Again, new lows still near zero, but outpacing new highs and has been really for a while, right? Again, we've been cautious now since early December, December 12th. Yeah, that's when we got cautious and cautious to bearish. This these arrows kind of show the progression. Again, breadth is weak, and this cycle work down here still has it as a negative cycle. Again, we got a little cautious a little bit ahead of that, and still negative cycle. All right, so again, there's nothing here that says things are changing. Looking at our SPY chart on this dashboard, again, I'm going to just go ahead and put this in, plug that in there, and change that to red. Fine. Actually, which red do we use? That red? We'll use that red. All right. And you see, again, here's the progression, cautious to not cautious, right? Again, and sometimes, we're green, green, green. Maybe there's a couple little bumps in there, but we're still cautiously bullish. That's kind of what that means, right? If you see this like two arrows on top of each other, we're still bullish, but we're just a little bit more, we have our levels, right? We have our levels. So anyway, momentum is still to the downside, and things did get overdone a little bit to the downside. That's what this very fast momentum indicator shows. But this does not mean go ahead and start buying because the bigger picture is still negative. This just says that, if you're trying, let's say you're trying to short, maybe this isn't the best time to short. Again, it's no indicator is perfect, but this one's been pretty good overall once it gets to extremes, and that's what we're watching for. Again, nothing is, maybe again short term a little bit overdone. So maybe we get a day or two of bounce. That's a possibility. Uh, but I don't think much more than that. Looking at the VIX, the VIX has now above the 16.5 level and really didn't drop back into this very bullish range. And it's at 17 now. So it's not low, low. It's not crazy high, but it's higher than what we would like. Credit spreads are, you know, they're reasonably tight still, in a range, reasonably tight. I can't say I'm too worried about them right here. Percent of stocks above the 50-day. Again, breadth is weak. Put call ratio. That's not what the put call ratio is. This one is put call ratio. Things aren't overly done. If anything, there may be even a little bit bullish right now, which is kind of surprising with the market looking so weak. And then I think one of the things we got to watch into the new year is the dollar. We had some strength in the dollar today. This looks like it wants higher. We don't know that until after the fact, but that's looking at this big trend. I mean, this is a big base. Like, I wouldn't be shocked if we could get up to, 115 and maybe even 120. That wouldn't shock me. Now, if we get above 120, that's a big deal. Even getting to 120, I think, is a big deal because that's where it's topped in the past. So we'll keep watching it though. High with the dollar going higher, I think it makes it for a harder environment for stocks to go up. That's just the way that I think it's going to work, and we'll just keep watching for that. We also have the 10-year yield. Again, as the 10-year decides to move higher, if it does, basically thumbing its nose at the Fed, trying to cut rates, 10 years going higher. I wouldn't be shocked if we hit the 5% or even 5.2, 5.3. Again, if we do that rather quickly, that could be a problem, right? And there's a lot of different reasons and whys and everything else. We don't really care about that, but the movement of is what we're watching for. So that's a big deal. So we have again, a very cautious look to the new year to start it. I think that if we do go back into a bullish phase of the new year, I want to take profits a little bit sooner. I'm looking, and again, we'll talk about that more as the year progresses, right? On our weekly videos and these midweek videos. But I'm thinking faster profit targets. We may not get those nice, beautiful trending stocks like we've had this year, right? We've had amazing runs this year, very fast runs, very bullish action this year. I'm thinking that we're going to be more like 2022. If you remember 2022, we'll just keep it on this chart for now. This was 2022, right? It was not an easy, but we did get these snapbacks, right? So this is not easy trading environment. And again, my feeling is that we're going to get something more like this. Not that's going to match it exactly, but it may be, down to sideways, it could be something like in this range right here. This is a very hard trading environment into 2023. Look how this is just so you can see on camera, just up and down like that. Again, but if we can take advantage of these bullish runs and hopefully sidestep some of these bearish pieces, we can do okay in this environment. And that's what my goal is. And that's the way I'm looking at that this next year as we come up. And if I'm wrong, great. If it's more bullish than that, amazing, we'll do well. And if it's less bullish than that, you know what? We're prepared for that, and that's what we're looking forward to. All right, let's go into USA, which is basically all the sectors, including bonds. Bonds look like they want lower, rates higher. The Dow Jones Industrial under the 50-day, IWM under the 50-day, mid caps under the 50-day, NASDAQ right at the 50-day, SPY under the 50-day. So first off, right off the bat, you see on the index level, things are looking bad. Now let's break it down to all the sectors in the SPY. Materials. Again, we're looking for absolute and relative strength here. So we can say, okay, where can we push into? But materials well under the 50 and the 200-day. Communications right at the 50-day. Energy well under, and looks like a bear flag to be honest. XLF under the 50-day. XLI under the 50-day. XLK under the 50-day. XLP under the 200-day. XLRE under the 200-day. Utilities, XLU under the 50-day. Again, this is just again to show you how weak the market is. And the only one, consumer discretionary, which is above the 50-day in any real way, and it looks like it's in a downtrend. Lower high, lower low. So I don't even feel comfortable with that. But only one sector is still above its 50-day moving average, just to show you how weak this market is. And again, we've been cautious this market now for 3 weeks, right? Because we've been seeing this toppy look to it. All right, so what names? Let's drill it down to specific names that are holding up well. And this comes from our extended watch list. I pared it down again, only looking for what's holding the best, because if we do get a snapback, these are the ones we are looking forward to being part of. So right now, App 11 still holding up well, underneath the 23-day, but above this VWAP, so that's a positive. Again, if we start to lose these areas, then they come off the list. Palantir, so far, holding up pretty well. Ionic, same thing, holding up well. Again, idea generation, if you're looking to trade, that's what this is for, but it also just gives you a feel of what's doing well in the market, looking at specific stocks. CRDO, holding up relatively well. So is Marvel, which is a semiconductor name. So that means a lot, that this particular one. So if we do get a rebound in semiconductors, this may be one of the few that do very, very well, right? The real retail discretionary, that's what's going on there. Rigetti Computing, again, same like Ionic, right? So maybe the run in these quantum computers or whatever that you want to call it is not over yet. We'll see. Again, these are very fast moving, which means if they're going to move against you, they can move 30% in a day. Just know what you're buying, right? That's hard to control. Risk. Sienna Corporation holding up relatively well. Same thing for Archer Aviation. Again, if it loses this area, that's a different story. There's your RCAT holding up reasonably well. Qubits, again, another one, fast mover. Careful for some of these names. Calavio, still holding up well. Same thing for Qubit. Teva Pharmaceuticals, well, a little bit extended actually still. AAOI, another semiconductor name holding up pretty well. Roblox, reasonably well, right? A-Lab, another one holding up nicely. That's another semiconductor name. If we do get some relief in that sector, this one can do well. Google, the mega caps, maybe the nicest looking one. Amazon's not looking bad either, but Google looks pretty good. SoundHound, AI type of play. Again, 12% down today, but still above this area, which is the original IPO high, which is a big deal for me. So above 18, 18 or so. I think we could be long this name. Below 18, no reason to be long that name. Rubrik had a position, it stopped out, thankfully, because it was a small loss, and then it saved me from a bigger loss. Rocket Lab still looks good. I love rockets. in 2025 if it can continue. I mean, that is the future, right? It's just starting, quantum computing, rockets, AI. Those are futuristic names. Those are names that we want to be involved in. Even some of those drone names are looking okay, pretty, and robotics names. Those are names that I'm looking for opportunities in. Lunar, another rocket name that looks really good. SoFi holding up reasonably well. If it starts to lose more of this, I'd probably get, take it off the list. Reddit, again, looks pretty nice. Tesla, right at its breakout point. So that's why it's still on the list. Um, right? So is it just a retest and then do we get a bounce from here? And then we could get involved, or is this something more? I've been looking for this area and now a retake of this VWAP from the highs, whether you put it here or put it here, I don't think it matters too much. A retake of that VWAP, and that's where I want to get involved in Tesla. So I'm not ready yet, but I'm watching this one if it can hold this area and start to rebound. RDW, again, pretty nasty day today. May come off if it shows more of that. And EOS, I don't know much about this name, but it's doing very, very well. So came up on one of my scans. So there you go. Those 28 names right now, I feel are holding up the best or have a lot of potential in 2025. And so I want to just really keep my eyes on them. If you notice, you didn't see NVIDIA on here, right? Let's look at NVIDIA real fast. Why would NVIDIA be on here when it's below its 50-day? It's making lower highs and lower lows. And basically, it's been in a downtrend since November, right? It peaked, whether you call it here or here, but yeah, that's, it's peaked. And there's no reason to be involved in NVIDIA and many other names that you may love because they're not acting well now. They did in the past, they've been amazing names in the past. Thank you. But now they're not. So it's time for us to rotate and move on to what is. And if there is not much, it's okay to have higher levels of cash, sit on our hands, relax, get ready for that next step in the market. And I guess that's the point. So we're into the conclusion piece. Is there's no reason to rush. The markets will always be there for us, and there will always be another setup. We are never going to be able to catch that bottom perfectly. Get that out of your minds. That's not what we're doing here. We're aiming to see the bottom, miss that first 10% of the move, 7%, 8%, 12%, whatever it may be. But but what we want to catch is that middle 80%. And you know what? We're at the top, we may be a little bit long. And that's okay too. Hopefully we've identified it, the market changing, and we've got started to scale out. Well, we may be along, but we can make that 80% in the middle of bullish times in the market. We are going to have a great chance of making money in this market. And that's what I'm hoping to do even more of in 2025 is identifying those bullish times, trade heavier during those bullish times, and when we're not bullish or we're a little bit more cautious, scale back, relax, enjoy, calm. We don't need that dopamine hit at that point. The dopamine hit actually comes by not trading and seeing the market wobble or go sideways or whatever, what I'm saying, or even decline. But that's where the dopamine hit actually comes these days, not from actually these big gains, from being able to trade with the market and choose not to trade when the market doesn't trade well. Okay. That's what I got for you. Thank you all for being subscribers. I really do appreciate you. Happy, healthy, prosperous 2025 to everybody out there. If you're not a subscriber yet, honestly, give it a try. It's $10 a month. Super, super reasonable for everybody. And again, I hope you enjoyed the free view. This is the last of it until next year. And again, y'all take care. Happy New Year. Bye-bye.